All right, so welcome to today's class. So I'll be showing you guys market structure, how to identify your market structure on the chart, and then having a good view because market structure is key to everything. Like the popular saying that market structure is king. So you cannot actually just get into the market without understanding where the market is heading to. So we have two types of structures, right? Or we have several structures such as the uptrend, the downtrend, the consolidation market, and the ranging market, and the choppy. So the ranging and the consolidation is still the same thing, all right? So when market is giving you series of higher highs and higher lows, it simply means that it's an uptrend, all right? And then when market is giving you series of lower lows, lower high, lower lows, lower high, then it's actually showing indication that the market is moving down. Now, in this situation, you actually look for sell opportunity, while when the market is giving you higher highs and higher lows, you'll be actually looking out for buying opportunities. All right. So when the market is ranging, it means that the market is actually moving sideways, like just moving sideways. Let me explain it here. Let me push my chart. All right. So now let's go back again. So we have uptrend. All right. So in the uptrend, we need to see series of higher highs and higher lows. So we need to see market moving this way, like this, then push down like this. So in this situation, hold on. So here is our HH. HH simply means higher high. So our HH. Alright, so is our H low. HL simply means higher low. So in this situation now, we can see the market is moving up. You understand? So just by looking at this chart now, you can notice the market is moving up. So anytime you see market is moving up like this, in this situation, moving towards the upside, it simply means that we're in a buy scenario. Okay, so all we'll be looking out for is a buy opportunity. All right. So when market is giving you series of higher highs, I mean lower highs and lower lows, then you look for selling opportunity, something like this. See. Now, realistically, the chart is not like this. The chart doesn't move so smoothly like this. So this is just an example. All right. So we have price giving us our lower high, then our lower low. So LL stands for lower low, LH stands for lower high. All right. So what actually makes a downtrend, like for you to be sure that the market is moving down, anytime price is breaking your most recent lows, these are your lows. So we had we saw price moving down like this, pushed up, and then failed to break this high here. All right, this swing points here, and then now price now moved below this lower low. This is our new low here. All right, so price now moved below this point here. So automatically it's giving us a sign that market wants to keep pushing down. All right. So then we had market again pushing up again, failed to break this high and also push down. All right. So breaking this low. So anytime market is breaking our most recent lows, that is lower low, lower low, lower low, It simply means that we're in a downtrend. So in this situation, we'll actually be looking at for a sell opportunities. All right. Then on the uptrend, you see just like the opposite of it. Now market is giving us rates of higher highs and higher lows. Price failed to break this low here, and then pushed up and then pushed up from here, moved above this high. So anytime price is moving above our most recent high, is a confirmation that the market is still bullish and the market wants to keep buying. All right. So in this situation, you keep looking out for buying opportunities. So all you watch out in an uptrend is this: always look for your most recent highs to be broken. All right. So anytime you have your you see price moving above your most recent high, then you consider it that okay, fine, you'll be looking at for buying opportunity. So how do you determine this? It's just by you going to your bigger time frame, all right, such as the 4 hours, the 1 hour, the daily time frame, to run your analysis to know exactly where the market is moving to. All right. So to look at where the market is going to. Then we also have the ranging market. Now the ranging market moves sideways, all right? So it moves like this. Sometimes you see market moving this way, just moving this way, like this. Now, some persons actually trade this market in the sense that, especially those who trade support and resistance. So even if you're a smart money trader, you can actually trade this way too. So some persons will actually take opportunities here for support and resistance traders. They look for a way to pick up their trades from here. Price get to this point, touch, they look for rejection candle, push it down like this and trade. But then, and this is not what I'm trying to explain. I'm actually showing you guys an example of a ranging market. All right. So market will be moving sideways. So in this situation, you can either wait for a breakout, then wait for mitigation before pushing up. All right. But then this is just an example of a ranging market. Then the chopping market moves this way. Like you won't even understand it. It's just kind of moving somehow. All right. So in this situation, you don't even trade this stuff here. You don't trade it, so you just avoid it. So once you notice that the market is being choppy, sometimes it happens during news hour, during essential run hours and all that. So you just simply avoid it. All right. So that is the reason why they said that the trend is your friend. So always remember that anything that is bullish, it means that you're looking for buying opportunities. Anything that is bearish, it means that you're looking for selling opportunities. How do you determine these things? Is by you using your bigger time frame. All right. It's by using your bigger time frame for you to determine if the market is going up or if the market is going down, moving down. All right. So now let me give you guys a chart example of what I've been saying. So let me use let me use all right. Now let's use this pair. Um, Can you guys hear me? Yeah. All right. So now we'll use this pair as an example. This is Euro USD. So we'll use it to determine to know our trend. All right. So like I said, we have to use the bigger time frame. So before we move further, let me explain the time frames properly. All right. So if you look at this screen here, we have the daily here. You can see the 1 day, the 4 hours, the 1 hour, the 30 minutes, 15 minutes, 5 minutes, 3 minutes, and 1 minute. All right. So the daily time frame is your bigger time frame. So we have the higher time frame, we have the intermediate time frame, and we also have the lower time frame. All right. So the daily time frame shows you what will happen for the day. So some persons actually scale down to the daily time frame to look for the directional bias. So directional bias simply means you knowing where the market is going to. So what are your expectations? Are you expecting market to go up or you expecting market to come down? All right. Then we have the 4 hours. So basically, you can use the 4 hours for as a day trader and 1 hour as a day trader. Then you can also use the 30 minutes and the 15 minutes. But then I suggest strongly that you use the 5, 3, and 1 minute as your execution time frame. As your execution time frame. Okay. So now what we have to do is this. Since we consider the daily, so we also have the weekly. Let me put down. We also have the weekly and the monthly. Okay, so now look at we have the monthly and the weekly. So the monthly you can actually do your analysis, know your directional bias, what will happen for the month, your expectation for the month, your expectation for the week, your expectation for the day, and in 4 hours that is your intraday trading method. All right. So all you need to do is this: like you look for your higher time frame, and make use of it. Now, how do you know that the market wants to like? How do you know the direction of the market for the day? All right. So it's just simple. Probably you go to daily time frame. It depends on the kind of trader you are. So if you're a swing trader, you can scale down to weekly time frame and know the directional bias for the week, daily 4 hours, and then you enter your trade in 1 hour. All right. So if you're a day trader, you can start from daily 4 hours and then maybe enter your trading at 15 minutes. Okay, so it's subjective. But then I also explain the time frame analysis. So I'm just kind of giving you guys an introduction to the time frame so that you'll be able to understand it properly. Now, for us to know our directional bias or for us to be able to um, determine where the market is going to, so you have to work with your higher time frame. So now in this case, we're using the 4 hours time frame. All right. So let's go to the 4 hours. Okay. So now in this situation, you can clearly see here that on the 4 hours time frame, we had the push here, yeah, all right, and then price moved here, then pulled down. So this is our higher high, this is our higher low. Then remember that this particular point here failed to break this low, all right, and then pushed again above our most recent high. Remember, I said that anytime price is moving above our most recent highs, always moving above our most recent high, it means that market is giving us expectation of buy. All right. So in this situation, we'll be actually be looking at for buying opportunities. Now, we had a pullback again, or a higher low, and then push. But then you can't call this point here, this particular point here, your higher high. Why? Because on the 4 hours time frame, it failed to break this high. All right. But then we now had a push again. This particular push made this move above this high and this high. So these are our higher high, and then these are our higher low. All right. So now you can obviously see that on the 4 hours time frame on EU. So you can obviously see that on the 4 hours time frame on EU, we are bullish. All right. So in this situation, we'll be looking out for buying opportunities. Okay. So you don't sell. Remember that the trend is your friend. So since the market is bullish, all you'll be looking at for is buying opportunities. So now price now failed to break this low, and then price moved again above this high, giving us a new high, and then pushed down. All right, to this point here. Now, this is a clear example of an uptrend from the 4 hours perspective. Okay. Now let's scale down. Let's see if we can identify our downtrend again. So the next example is our downtrend, which is this point here. Now we now had a push here up, and then yeah, at this point here, price failed to break this low, so you can't call this place your lower low. All right, then price pushed up here, failed to break this high, and then push below this low, giving us a new lower low. All right. So now in the previous example I gave us, I said that anytime market is breaking our most recent lows, all right, it's actually giving us a sign that the market will keep selling and giving us a sign that this is a downtrend. So in a downtrend, you look for selling opportunities. Okay, so you don't buy. Though we have the pro trend and the counter trend, so you can actually buy or sell. But then, for the purpose of this example and everything, I'm just showing you guys how to identify the uptrend and the downtrend. Okay, so you now push down again, then price now push from this point again, down again, pushing below this low. All right, and then moved up again, push, moved up again, push. Same principle, right? So in this situation now, you actually be looking at for what a selling opportunity. You can see this is your high, this is your low, this is your high, this is your low, this is your high, this is your low, this is your high, this is your high, this is your high, and this is your low. So anytime price breaks your most recent low, lower low, lower high, lower low. All right. So now we're able to identify our and downtrend. So in a downtrend, you look for what is selling opportunities. All right. So in an uptrend, you look for buying opportunities. You can obviously see that here too. We had price giving us series of higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. Okay. So now, once you're able to establish your directional bias, that is when you now look for entries to see where you want to enter, what are your criteria to enter, and all that. But then, this is a beginner's this particular video is for structures. Okay, now let me also give you another example again. Example of internal and external structures. Okay, right. So when you okay, so if the 4 hours is like this, you have a one push like this. So if the 4 hours is like this, it means that if you scale down to 1 hour or 15 minutes, within then you'll be seeing good structures like this. Seeing structures like this. These are in between structures. Okay, be seeing structures like this. So it means that in these situations, people are actually buying and selling, buying and selling, buying and selling, right? So you'll be seeing structures like this. Now, why is it so? Because one, it takes 4 hours for one candle to form. Now let's use this as a case study. This particular candle here. So it takes 4 hours for a particular candle to form, all right? Form and close. Then if you scale down to 1 hour, it means that on the 1 hour time frame, you need to see four candles in this particular spot here. So it means that 1 hour, one candle, 1 hour, one candle, 1 hour, one candle, 1 hour, one candle. That is four candles. So if I scale down to each one, now you can see. So we're having one, two, three, and four, right? So we're having four candles. Now, if you scale down this same thing, you're seeing four candles here. If you scale down to 15 minutes, it will now break it down again. And say we have a lot of candles here again, 15 minutes. So each of this candle represent 15, 15, 15 minutes. Okay, so it takes 15 minutes for each of those candles to form. All right. So whatever you are seeing on the bigger time frame, you can also see it on the lower time frame or intermediate time frame. All right. So all you need to understand is you use your bigger time frame to know your directional bias, to know where the market is heading to, and you can also use the bigger time frame using that to also draw your zones. Okay. So now in this situation, now how do you um use your other time frames, all right, to know the internal structures and internal structures. But then before I will go into that, I would like to also explain properly how to know when a trend changes. All right. Now let's go back to our 4 hours. Because sometimes people ask, okay, how do you know that the trend has changed and all that? All right, so on the 4 hours time frame, we're having price moving this way. All right. So price is giving us lower high, lower low, lower high. Why? Because price failed to break here. Then price push below this point here, lower low. Now we had price giving us series of lower highs and lower lows, lower highs and lower lows. Remember that this is the bigger time frame. So this is your 4 hours. It could be 4 hours. It could be 1 hour. All right. It could be 15 minutes. So it depends on the time frame you're using as your higher time frame. Okay. So now since we're using 4 hours as a case study, now we had price now push down, breaking this low. All right. So let's keep it at this point. Now, since this is the 4 hours time frame, we had a break of structure here. So let me explain that. Now, anytime price moves below a low, like I had a push here, and then price moved below this, below your most recent low or high, is a break of structure. So all you need to do is you draw it into the future. Just draw it into the future here. All right. So now we had price again, move down again, below this low again. You draw it into the future. Now we had price again, moving again below this place again. We draw it into the future from this point, this low to this point. Now, this particular place is called the break of structure. You can also call it the BOS. So abbreviation is BOS. So just BOS, right? So this is break of structure, right? So you have the break of structure here, break of structure, break of structure, break of structure. All right. So now I was actually talking about how can we know when when the trend is changing. Now since this is our higher time frame, okay. So all you need to do, you wait. Now you see price made a break of push down here, and then we had a break of structure here. So you need to wait for this high to be broken. First confirmation, this high to be broken. So all I'm waiting for is this. I'm waiting for this high to be broken. So I need to see a valid break of structure here. A valid break of structure here. All right. So price will now move. I'm expecting price to move this way above this particular high with a body move like close above this particular high, then push down, then before going up. All right. So now some persons can actually make their decision around here, which in the next videos when we'll be talking about entries and our strategies and everything, I'll explain why we should take our entries from this point. Okay. So now this is the first confirmation that the trend wants to change. So you can actually call it intent or chop. Intent. Nice. So market is actually giving you intention that it wants to change. Okay. So now at this level, all you need to do, that this is your first sign of change of character. So you can call it intent or change of character. That is chop. Okay. So this is the first sign. So now I need to wait for the second break, which is this point here, this high. So I've gotten a second break, and then you wait for price to what, push down, and then keep buying. All right. So in this situation now, you have successfully predict that from a downtrend, market successfully moved from a downtrend to an uptrend. All right. So now another example now again is this. You still have, let's say, you are buying, right? So you see the same thing, you're buying. So remember that anytime price moves above your most recent high is a break of structure, and then it's also giving you a sign that market is going up. Okay. So we are having a break of structure here, break of structure here, and then break of structure here. Okay. So now, so having, let me add it out, BOS. So now we're having a break of structure here, break of structure here, break of structure here. Now remember that this thing works perfectly on the higher time frame. Now all you need to do is to wait for your most recent low to be broken. Where is your most recent low? This is your most recent low here. Okay. So I'll now wait for price to now. break below here, first break. So now price has given us a sign that market wants to change. So it could be intent or it could be chalk. All right. So chalk is change of character. Intent is like intention, showing the sign that market wants to from an uptrend to a downtrend. Because sometimes market can actually move like this, push down here, give you a mitigation here, and then push up. All right. So that's why most times we always use what we call our entry models, our confirmatory entries. All right. So now if once price gets to this point and pull back again and gives us a second break here, this is now a confirmation that the trend has changed. So we now had a second break here. So remember, this is our intent here. So then the second break will be your BOS. Okay. So your BOS pause. Okay, it's pause. Okay. So now you expect price now to now push down and push, move, push, move, and push. Now in this situation, you have successfully moved from an uptrend to a downtrend to an uptrend. All right. So knowing when market will change. Now let's go to our chart again. Now this is a perfect example. So in this example now, like using Euro USD as our case study, we are having price giving us our low, our high, our low, our high, our low, our high. That is lower high, lower low, lower low, lower high, lower low, lower high, lower low. Now, this so sorry, there was kind of like a pullback somewhere here. So we're having a pullback, a big pullback somewhere here, push before price move down. All right. So in this situation now, in this situation, we're actually having so in this situation we're having a break of structure here. Mm. So we're having what a break of structure here, right? To the downside. But then the confirmation, so the confirmation that this is our most recent high. Remember that when market is selling down and you want to have a confirmation that market wants to go up, price needs to break your most recent high. So now this is our most recent high, right? So first sign there. So this is our intent. So you could call it chop, change of character. So I'm just using the word intent here. All right. So now we had the first break. So immediately we had the first break, but price moved from this point above here and then pushed down, okay, to this level. And then another confirmation that we had price again moving above this point here. So our second break, which is our break of structure, our BOS. So let me put it out there, which is this point here. So we're now having what our BOS. Okay. Yeah. So immediately we now had a pullback, slight pullback into this fair value gap, then before price pushed up. All right. So you can see that successfully from a downtrend, you are giving us series of higher lows, lower low and lower high, lower low and lower high. Then price successfully moved from a downtrend to an uptrend using our 4 hours time frame as your directional bias. All right. Now let me give you guys another example. Okay. So now another example here is this from an uptrend to a downtrend. All right. So see, this is our higher low, higher high, higher high, higher low, higher high, higher low, higher high, or higher low. Now, in this situation, there's a price moving here, higher low, then higher high, higher low, higher high, higher low, and then we can call this higher high. Why? Because price failed to break here, right? Then price pushed down, failed to break this low, and also giving us a sign of weakness that price couldn't break this point here. So we had the push down again, price did not successfully break any of these lows here, and then price pushed up. Now remember the concept. I said that when market is moving up, for you to know that the trend wants to change, you need to see your lows being broken. All right. The first break is here. The first break is actually showing us a sign that market wants to start selling. Second break is like a more confirmation that the market is selling down. So in this situation, all you need to do to mark out your most recent low. So where's our most recent low here? This is our most recent low at this point. All right. So you actually need to wait for price to move down. Here now price failed to break here, so it's not valid. Price pushed up again, and then before price moving down, here using this place as our most recent low. Okay, so now we now had a new low here. So we need price now to break it. So price move from this point, creating a low, creating a high, and then push down. So we now had what our intent here, right? Intent. Then price now pushed up again, and then give us a second confirmation that okay, fine. Price has moved from what an uptrend to a downtrend. Okay, so price keep on going down, going down, going down. So this is just like a repetition, all right, showing you how market moves from one point to another, one point to another. So it's all about you um knowing your directional bias, knowing where the market is going to for the day, know where the market is going to for the that is for the day. If you're an intraday trader too, you can use your 4 hours. If you're a scalper, you can use your 5 minutes, 15 minutes. So it all depends on the kind of trader that you are. So in our next video, I'll be showing us how to use the 1 hour time frame, that is scaling down from bigger time frame to the smaller time frame. All right. So just like showing us our internal structures and our external structures. All right. Because we actually need these things to be able to trade effectively using this strategy. All right. So one thing is for you to spot out your bigger time frame moves, and another thing is for you to have a clearer view on the lower time frame so that you're able to take good actions. All right. So what happens is that I will see you guys in the next video, and I'll be explaining more on internal and external structures. All right. So thank you guys.